Ganesh Balendran from ETF Securities. Welcome to the Equities and Growth Assets Symposium.
Thanks for having us here, Drew.
Can you explain some of the benefits that thematic investments can provide to traditional portfolios?
Yes, it helps investors to be able to tilt their portfolios to a particular theme or an idea via a managed ETF structure. So historically, clients might have to take some single stock picking to pick a particular theme, whether it's technology, healthcare, battery tech. But now with the benefits of ETFs tracking these themes and thematics, investors can buy an ETF that tracks a particular theme that an investor is looking for exposure to.
And what are some of the other benefits of using ETFs in that role?
The main benefits is that the diversification benefits. You're not having that single stock risk of picking a particular stock within a theme or a sector that you're looking at. So you're getting diversification. The index provider will manage the constituents according to the fund's objective to track that theme.
In which thematics are you seeing the most interest or flows?
So in our range, we're seeing our battery tech and lithium ETF taking the most amount of flows. It's our second largest fund. It's over $500 million, and it is a theme that's all around us. It's, investors are looking at it. There's corporations behind it. There's governments pushing towards this whole push towards clean, renewable energy, and batteries as an essential key component to actually making the world greener. So hence, there's a lot of investor interest in getting exposure to the sector via battery technology and lithium via the ETF.
And can you expand on what the universe of that ETF looks like?
Of course, so it looks at battery technology and lithium stocks from the developed world, plus Korea and Taiwan. So we have two databases, data providers. Our index provider will look at clean horizons, clean grid storage projects all around the world, take companies from there, and also lithium miners digging up battery-grade lithium. The 30 companies with the largest market caps, the ones that go in the portfolio.
And which themes do you see attracting the most interest in the next few years?
So that's an interesting question, but we sort of see the battery tech and lithium theme will continue. Other areas that we are seeing interest is just broad technology and robotics, automation, and AI. We're seeing investors doing a bit of dip buying as well, and these themes are forecast to continue to grow going forward as the technologies get better, faster, and also as the costs come down, their usages continue to expand and grow.
And value investing has somewhat come back into favour. What sort of exposure are you providing in that area?
So on the value side, we have regional and sectorial tilts. So we have a European ETF, ESTX. It tracks the 50 largest companies in Europe. European market's always been relatively cheap to America, and the Australian market is trading at a very attractive price to earnings ratio. The other one we have is the US dividend payers low vol ETF, ASX code ZYUS. It looks for the 50 companies with the highest yield and lowest realized volatility. So it's got a bit of that value tilt looking at from America, and it generally provides an income premium of about 2.5% over the S&P 500.
And where is ETF Securities likely to expand in the next 12 months?
So we are looking at digital assets. We announced our intention to launch Australia's first Bitcoin and Ethereum ETFs late last year. We are still waiting for final exchange approvals to get on, so is some of our peers, and also we're looking at US dollar fixed income as well. Those are the two areas that we're sort of exploring, bringing out to market to continue to add value to the Australian market.
Ganesh, thank you.
Thank you very much, Drew.